Now let's get back to stocks, and Chinese power producers are in focus as the head of Asia Power and Renewable Energy Research at Nomura is calling them a turnaround story. Ivan Lee joins me now in the studio, and Ivan and his team at Nomura are ranked in the top 5 among Asian utility analysts in the 2009 Institutional Investors Poll. Good to see you, Ivan. How are you?
Yeah, very good.
Excellent. Well, let's talk about these China power producers because you're calling them a turnaround story. That's pretty interesting. Is it because of the pickup that we're seeing in the economy? A lot of people see these stocks as really a proxy to play China's economic growth.
Yeah, no, you can say so. But it's most importantly because there was a tariff hike about 11% in the third quarter of last year. So if you look at as China in the last year, about 80% of the power companies they were in a loss. As total loss of amount about as 70 billion RMB last year. But this year so far in the first half, I think all of them has been turning profitable. Was mainly because of tariff hike, and also the reasons behind is the interest rate has come down by about 81 basis points last year, and also that the coal price is most important. It's come down by about 40% from the peak of last year.
Yeah,
so
let's talk about coal prices because we had a big story yesterday here on the Bloomberg, and it said that prices will fall. But in fact, Barclays is predicting a price drop even more so in the second half. And China's not importing as much coal anymore, so they're ramping up capacity. Do you see coal prices falling even further?
For us, we're expecting the coal price to come down by further 5% next year. So mainly because of the balance in supply and demand, and second of all, because of the increase in productions. Over the last couple of years, the direct investment on the coal sector has been rising by about 30%, 6% per annum. So it's a huge investment over there because obviously it's very lucrative profit, right? So as a result, those production will come out over the next 2 years. So and also look at the spot coal price so far in Qinhuangdao has been flat since the early of this year, so around 570 RMB per ton. So also the other key data point that we're looking at is about the coal inventory at the power plant levels. It's been maintained about 17 days to 18 days. It's very comfortable levels. Usually they only need about 2 weeks. So as a result, we're seeing the coal price will be stabilizing over next 6 months and maybe dropping another 5% in 2010.
Another 5% in the year 2010.
Yeah, right.
Okay, well let's talk about Chinese producers. You look across the Asia Pac. You cover stocks across the Asia Pac. Let me just ask you, since we're focusing on China, I assume that China IPPs are probably the best plays in this space. Is that correct?
I think it's correct, at this moment, because obviously looking for upside, looking for turnaround stories. So this sector has been turning profitable, and look at the first half result, it's been very exciting, especially the second quarter implied one way of 1.5 times to almost 13 times compared to the first quarter of this year. That means that first quarter basically they do nothing, and second quarter they really coming to profit. So if you look at that one rate, they implying the P of the sector is only about 10 times, 11 times, price about 1.3 times, 1.5 times. So it's very attractive compared to normally they trade about it's a 1.5 times to 2 times book value, and maybe between PE they're still seeing some upside to go.
Wow, 1.5 is pretty compelling, I would say. It sounds like a very cheap pricing for Chinese IPPs.
Yeah, right, that's true. Because normally they can make a return of about 15%, 10% ROE. So
15%,
yeah,
10% ROE. So that is compelling, I guess, in comparison.
Yeah.
Okay, so let's talk about the specific ones that you cover. I mean, there's really 3 or 4 big ones in China, right? We have Datang, we have Huaneng, and also China Resources Power. So before we get into the individual stocks, out of the 3, which one do you think is probably the best play right now?
I think obviously now we're looking for some catch-up play. So our top pick so far now is Datang. The reasons behind is the variation is very compelling because they not only have power portfolio, but also they have coal portfolio. Right. For the coal portfolio, they account for about 11.8 billion tons of coal reserve, which is very big. And just looking at that, you're using some market multiples of the pure coal companies, like Yanzhou Coal, China Coal, Shenhua. You can have about $4 per share. So you're looking at the coal portfolio, the power portfolio, about 18 gigawatt. You're looking at Kuala Power, which is a pure, power portfolios, power companies. Using their market multiples, you can have another $4 per share. That means that adding power and coal together, you have $8 per share. So compared to current price about $5, you're still looking at quite substantial upsides.
Yeah, well, your price target on this stock, and maybe we can bring up the chart again for Datang, is 6 Hong Kong dollars versus its last close of 457. That's huge. That's a 31% upside.
Yeah, right. Besides, for that company that it's an obviously a catch-up pay because the first half they were underperformed. Reasons behind is they have some investment in the coal chemical projects, which is the coal to polypropylene projects. Because at the time that the oil price was very low, so the projects that the market is believed that it was very destructive. But now we have a higher oil price, about 60, 70 US dollar per barrel. So that project should be profitable. So it means that that project will coming out from a very destructive into very attractive. So it's a huge value add. So as a result, we're saying there's a catch-up pay in the sectors, and management-wise is very, very attractive, and they have a huge as a coal reserve, so that can bring as a internal as a hedging on the future coal price increase.
But isn't the utilization rate for Datong down for the year?
Yeah, as I think all the IPP they have done this year, and this is I think up to market expectations. And obviously this is the lowest in terms of the utilization rate, and we're expecting that will be picking up next year.
It's highly leveraged as well. We're talking about 430% debt to equity ratio. I mean, isn't that a point of concern considering it seems higher than the average?
First of all, they're going to issue Asia, is about 7 billion as RMB, and they can reduce their gearing. Second of all, they're still enterprise, so there's no risk of any bankruptcy. And also said the liquidity is still very strong. They can continue to invest, and also on the back of falling coal price and interest rate, they can save a lot on that.
Maybe I can also get cheap loans these days.
Yeah, right in China. Yeah.
The amount of credit growth that we're seeing on the mainland. Okay, but let's move on to talk about one of the other China energy plays, which is Huaneng as well. That's also on your list of coverage. And again, like the rest of its competitors, also swing back to profit in the first half again benefiting from those higher tariffs as well.
Yeah, right. You look at it's Kuala Power basically is a proxy for sectors, right? Because they have an evenly distributed portfolio in China, and they're the biggest one, and also the good thing is that they also have ADR listed in the US. So that's why when the investor looking at turnaround stock for the sectors, obviously they pick Kuala Power, and also among those a three major power company, they are also the most leveraged to the falling coal price. So as a result, that if you look at the share price performance, so I think there has been the first as a performance in the sectors. There's been they have very good run in the first quarter, but now the valuations wise seems a little bit stretched. Around 1.6 times, 7 times price to book compared
Before
to
we
the
get into that, you mentioned the share price performance of Huaneng. I'm looking at these figures here, and year to date, this stock is only up about 4%, which it seems like a laggard compared to the rest of the industry.
I think is because if you look at the trough, is in the October last year. Actually, I think Kuala Power they went up quite a lot. Is maybe is on the year-to-date basis. They haven't come up. Because the other smaller one will really catch up. In the second quarter and also maybe in July.
Okay, well, let's get more into Huaneng because unlike Datong, you actually think that there's probably limited upside on the stock. We'll talk about Huaneng and the rest of the Chinese power plays with Ivan Li, who heads up one of the top 5 ranked energy research teams here in the Asia Pac. We'll have more with him after this break. Also, Chalco shares are dropping today here in Hong Kong after they posted a third quarterly loss, but it actually aims to break even in the first half, and we'll cross over to Beijing to find out more details and break down the numbers for you. That's coming up next. Stay with us. To get back to our discussion on Chinese power-producing stocks, we're talking to Ivan Li, who's the head of Asia Power and Renewable Energy Research at Nomura. And Ivan and his team are ranked in the top 5 by Institutional Investor magazine. Now, Ivan, you heard my colleague there. Maybe you didn't hear Steve, but Steve was talking about the threat of bubble conditions on the mainland and maybe lending being reined in. Are you expecting maybe a correction coming soon in Chinese mainland shares here in Hong Kong?
I think there might be the case that the Shanghai index gone up about over 50% this year. I think the government they might have some policy to control, especially on the bank's lending. So correction I think is healthy, and then so I think but there's buying opportunities. If you're seeing some retreat in the market, so especially then there's a sector talking about the power sector because obviously people look at that as a defensive sectors, and then also said you look at the demand growth for power in the second half this year has been picking up quite sharply. So we can see the activity has been coming through, and then the earnings been coming through. We've seen the first half result has been very, was optimistic. So that's why we're turning even more positive on the power sector.
Okay, well, let's talk about one of your buy calls, which is on Huaneng Power. Before we went to commercial break, again, your target price on this is 640. Let's bring up the chart if we can. Last close is 581. Just another 10% upside going forward. Compare that to the 30% upside that you were predicting for Datang. What makes this stock, I guess, less attractive in terms of gains going forward?
I think it's obviously that as I mentioned, it's being a proxy for the sector. So they're the largest portfolio, they have ADR, and also the people like them because of turnaround story. But if you look at valuations, also it's being one of the most expensive in the sector. They're actually 1.7 times book value compared to the sector around 1.2, 1.3. And and also in terms of the upside from M&A, they may not be as good as the others. And also said they don't have any core portfolio. As a result, we still like them, and so we're still a proxy for turnarounds. But in terms of upside, we see Datang, they may have a high upside.
Okay, quickly, let's talk about China Resources Power. Analysts love this stock because 22 say buy, you're saying hold, and your price target is actually below the consensus estimates on the Bloomberg system. What makes you more, say, bearish on this stock?
I think it's for China Resources Power. It's been a good company. So little to say. Just like it's over the last couple of years that just like last year when everybody did then lost, they still maintain a profit. And but what I believe that they might be positive. They might be less positive for them. Doing a market recovery, because while the others they are more lavish on the falling coal price and falling interest rate, they are less sensitive. So it results that look at the ROE spread over the others. And last year they could maintain about 8 percentage point or 10 percentage point, and this year maybe only reduced to only 3 to 4.
Okay, Ivan, we got to go. Unfortunately, nice talking to you, Ivan Lee of Nomura.